The Siler Wealth Management video blog. Today is actually Wednesday. I normally go Tuesday and Thursday, but today is Wednesday and the 1st of June, and we just finished the month of May, and the old adage, sell in May and go away, really didn't come to fruition, actually for the second year in a row. We were up a little bit in May, but let me tell you, last week's action, even though we had some good rally days, they were in very low volume, very low pre-holiday volume, and that really is not a true tell as to what the market's doing. I'm starting to see a little churning, the underlying parts of the market, and what that tells me is that, we're getting tired again. And on the S&P 500, that 2100 level, which we closed yesterday at 2096, that 2100 level is really a ton of resistance there. And what resistance means is when a stock or an indice hits a level where people start selling. And that is resistance, meaning as soon as it gets that level, people say, you know what, I think we're pretty fairly valued. I'm going to sell into this strength. That's what we're seeing here at 2100. We kind of see that too on the Dow around 18,000 as well. We're a few hundred points below that. But so that being said, I still think the market's in a little bit of trouble here. Short term, I think we're going to have June could be a rough month, could get beat up a little bit. Now it is a 60% chance that the Fed will raise rates by the July meeting. So 60% chance. So, Janet Yellen, the chairman of the Fed, has said that she believes, and a lot of the Fed governors have also agreed, they believe the economy is ready for a 25 basis point hike. Okay, 25 basis points is 0.25%. That would put the Fed funds rate at about 50 basis points. Again, not earth-shattering, but we got to watch things like the dollar. If we start seeing the dollar get strong again, that kind of hurts earnings on the multinational side. The big companies, the Johnson & Johnsons, the IBMs, the Home Depots of the world, all the companies that do multinational business. In a rising dollar environment, it does hurt their earnings because of the currency translation. So that's something we have to be cognizant of. I'm playing defense right now. I love floating rate, and floating rate will get you a little interest rate. It'll get you 4.5%, 5%. But you know what? Bottom line is, you probably aren't going to go down so much in a decline, and I do believe we'll see a 5% decline at some point. So we're talking, they'll call it 2100 right now on the S&P 500. We're technically at 2096, but just for ballpark circumstances, 2100, a 5% hit. 100 points. I think we could see that, certainly. We can see it with a one handle before the S&P 500. So we have to be protective. And one thing is, you got to look at what you own and make the moves. All right, you got to look at what sectors are coming into play. Energy still looking pretty good. In fact, one of the oil ministries yesterday said they believe oil can go to $60 a barrel. That's $10 more than where it is right now, or a 20% move. I've been very bullish oil. We own it, and that's why our portfolios have done really well this year, because we've participated in the oil rally. I still believe that healthcare is the place to be. Let's look at these sectors that have been beaten up, and I keep preaching this because what was working last year is probably not going to work this year. So what wasn't working is things we have to look at, and let's find the leaders. Let's find the best in class of what is working, and we can certainly help you with that. Now, I heard a disturbing fact yesterday. A lot of graduations going on. My daughter just graduated college, which is my last one. I have no more college expenses. But a disturbing fact is that most, on average, this is on average, when that college kid crosses that stage and gets that fake diploma, and when I say fake, it's because they don't really hand you the diploma, they leave that stage $35,000 in debt. That is absolutely crazy. That a poor kid at 24 years old, 23 years old, starts like $35,000 in debt. Not putting the blame on anybody, because some people think it really isn't the parents' responsibility to leverage themselves and pay through college. My belief is I'm not leveraging my retirement for a kid's college education. However, you plan ahead of time for that kid's college education, and that's the key. You don't want to leverage your retirement. You don't want to mortgage your house, but you should plan early. So for those of you that have grandchildren and young children, it's not too late. And there are a lot of options out there. We use a couple different 529 plans. There's a lot of things you can do. I know the Florida prepaid is still out there, but it's very, very expensive. And certainly I went through it. I know that we had the Florida prepaid, so I can help you and help you understand how these options work. But certainly, feel free to come in. We'll talk about that. But $35,000 in debt, that is unbelievable. And, a lot of these kids are coming out of college with a $40,000 a year job. It's really tough to make a loan payment on a $35,000 loan when you're making $40,000 a year. So let's be sure and plan so I can help you with that. Also, let's talk about coming up June 14th, Tuesday night, June 14th, backed by popular demand, our Women in Investing event. So we're going to have a Women in Investing workshop. I know many of you said you wanted to attend. You couldn't last time. It's open. All right, it's now open. Go on my website, stockdr.com, or silowealth.com. Two names, one website, and you can sign up. Go into events, and you can sign up for Women in Investing. Also, we'll do Market Jitters again after that event. So take a look at our schedule. And again, I just want to urge you that on our website, you've got some incredible materials. So check it out. And certainly you can email questions, because on every piece of material, it's a little box there. You can email a question. So while it's in the top tip of your mind, you go, hey, what do you think of this? So anyway, look, be prepared. Market downturn, short term. We have a little bit of negative economic data. A lot going on with Disney now. Down a little bit because the Alice in Wonderland second movie was absolutely horrible. It happens, okay? Wait till the next Star Wars. It'll be great. All right, it'll be huge. The election, a lot of noise. All right, the market has already priced in a Hillary Clinton win. If Donald wins, I don't think it's much different than Hillary. If Bernie wins, my recommendation for investments are shotgun shells and canned goods. Okay, so and plenty of bottled water. Okay, that's if Bernie wins, which is not an Ice Cube's chance in hell. Sorry for you Bernie supporters, but if you're a Bernie supporter, you probably aren't watching this video. Anyway, I'm Lee Seiler with Silo Wealth Management. I'm not going to do a cruise this week. I'll do it next week. All right, I'll do 2 next week. Silo Wealth Management, my website, stockdr.com. Call for an appointment, because you know what? Summertime, after Memorial Day, they actually stop wearing ties, although I probably will. During the summer, it does get warm. And come in, say hello, have a cup of coffee. Let's talk about your portfolio. We'll talk about your retirement accounts and see how we can get you where you want to be and develop that roadmap for you. All right, in the meantime, have a great week. Let's keep an eye on the markets. June 1st. Let's have a great day.